How's it going, guys? Welcome back to mentfx, and in this video today we are going to take an extra step from the video I released about last week or 2 weeks ago, where I dealt with a back testing session on a very random pair. I think we did GC or something like that. It was a fully random. What we did is we took that pair and we analyzed the higher time frame and found out the higher time frame was, I believe, in this range right here. And upon doing that, we had a demand zone we were working with, and basically on the lower time frames, as price came in here, we were looking to take buys to get up into this area. And if you remember correctly, we had one buy that failed fully, another buy that fully failed, a third buy that went, hit break even, and then a fourth buy that we got into at 0.5% risk. So we began to decrease our risk as we got involved in these trades, because once you're wrong once, the odds of a zone holding are going to become less and less. So we understand how to risk manage properly that way. And of course, if you want to know more about risk management and the way we look to get involved and our specific entry criterias and how we've created some of the most profitable traders on many prop firms now, check out the link in the description or the one below to join up with the mentorship. But anyway, what we did is we found this buy here and we began to manage it to specific highs and then to the overall liquidity high, because we understand that across multiple time frames, you are going to have ranges created. And the way we look at price is we understand that this right here counts as our basically range one, right? So this is a range on its own. And what we do is we look to target the range low or the range high. And in a scenario where we are having bullish breaks to the top side, we are going to look to target the ranges on the top side, because we understand the top side is what is allowing price to continue reaccumulating in the form of smart money, coming into the market, grabbing all the orders from weak to strong hands and continuing to the top side, oftentimes hitting the demand zone right before making that move. So that's actually what happened this week on EU. A lot of people in the mentorship, even people not in the mentorship, even people following the free public YouTube stuff, caught the move here. I had a lot of messages from you guys, and you have no idea how thankful I am for all the messages you guys leave me and for all the support you've shown me on this channel. But ultimately, let's get back to this, right? So you have your range one, and at the same time, what you have is you have another range being developed at the same time, right? So what I mean by that is inside of that range, you also have other ranges being developed. So this would be considered the range two, of this entire move, which means when we got involved in this trade here, as you remember in the video that we had released. So if you haven't seen that video yet, make sure you check it out. It's called Terrify the Banks. It's a back testing strategy that I don't really use, but it's something that you can see, and it'll do a lot to help you with your risk management, because you're going to see how there are losses taken before wins come into motion, right? And what we did is we basically looked to get involved right there. And as we did that, what we did is we didn't just target the top of the range one. Instead, we worked with the range two target and then the range one, because we understand that on multiple levels, there's always a number of structural plays being created. And as those structural plays are being created, there are going to be multiple points of liquidity that are going to act as points that smart money can use to distribute into and continue short, or can use to reaccumulate into and continue long. So that's kind of what happened here today, and we'll talk about that right now. So at the start of the week, honestly, I think it was like yesterday, so actually it was like Tuesday, I went ahead and sent out, let's see if we can find this. Yep, so I believe yesterday, so this is the aftermath. So what we did is yesterday at 2:29 a.m., this is New York time, we went ahead and sent out this right here. This is an 8-hour Euro US dollar chart, looking for price to come into this refined demand zone and continue long. This was the main bias for the week for me that I wanted to work off of, and we were going to look for confirmations to go long in this zone right here. So if we go back to the 8-hour very quickly, I can show you that right now. Before we view all of that, let's just delete this. What you'll see is, of course, that move to the top side. Those are those three bullish candles right there. And we were basically looking at this last down move before the up move to look at continuations upwards. And of course, as we're looking for those continuations upwards, you'll notice that the zone was selected with an imbalance present right above it, or an inefficiency or a lack of orders on behalf of smart money. So we understand that if price does come down, it's going to fulfill the orders that were unfilled at that point of inefficiency, as well as tap into the point that they had to sell into before buying when they came to clear the liquidity below whatever lows were in here before going long, right? So this is something that's also very important. You have to recognize that there is almost always on some kind of time frame liquidity being cleared by one of these down moves before the up moves. A lot of people try to teach you to use these demand zones and they teach you to have to look for instance, lows being taken out without recognizing that lows are always being taken out on some time frame. What I mean by that is if we go to like a 30-minute, right, and you take a look at this, that same zone right here, which is this big down move, right, and then this SND zone 2.0 that's being supported by that move, and then that's where we're looking to basically look for a confirmation entry long. If you notice it, there actually is a shit ton of liquidity that forms here, right, in the form of just lows. People are looking to buy into, people are looking to trail their stops. Those stop losses, again, get ran, sell stops get ran, smart money gets involved in those buy stops. Smart money takes that market higher, begins to unload their profits at swing highs, unload their profits at swing highs, unload their profits at swing highs, and get into more buys along the way. And what we expect is price will need to come back to mitigate those negative positions from when they sold, because they had to sell into a lot of orders and weren't able to close all of them. And we are able to see that by the lack of wicks in this area here, thereby showing us that in that area there was a lack of mitigation to be had. So smart money is negative on a position that they might have sold to buy into, so they need to come back, get rid of those sells, unload or upload on some more longs, right? Smart money to weak money transfer, aka Wyckoff, something I'm going to be dealing with in the future with you guys in more videos, and unfolded to the top side, targeting overall the higher supply zones up here, but ultimately targeting the liquidity highs created by this. So this is an idea of where you have multiple ranges on multiple time frames, but what we're doing is we're looking at this major range right here from this low to this high, thinking about this as a protected low, thinking about this as the liquidity high, and now looking for that simple unfolding of price to come into a demand zone, fulfilling whatever inefficiency and lack of orders that hadn't been fulfilled in the first place, and continue to the top side to clear the liquidity and continue putting in motion the institutional bullish structure, thereby allowing their orders to hold at a positive value overall and continue to unload those orders at places where buy stops are placed, which we clearly understand are placed on multiple levels by retail, by institutions, by smaller banks, etc., at points like this and other points like that in the market, right? So what we did is, if we take a look at this, let's break this down. So very quickly, just again in Discord, we sent out this right here, looking for that to come right into here and overall target these highs here. And you can see that that's exactly what we have here. At this point, what I did is I just wanted to play around with the timeframes a little bit. Let's go ahead and delete the brush tools here. I don't like having so many brushes out. There we go. So before we continue, right, instead of just using this overall zone, because I didn't like how large it was, I wanted to find out where exactly, what exact area I could really use to make this look a lot nicer, right? So what I did is, at the time of, as you went to a lower time frame, I found this really nice last down move before the up move, again with a imbalance present just above it, very small one, nice inefficiency, thereby showing me that this is an unmitigated demand zone and that there are more likely than not going to be orders in here that need to be cleared in the expectation that we're going to come and target new highs. So what we did is we had that zone selected right there. That's your last demand zone. You could have gone even lower and played around with the refinements. As you can see, if we kept refining, there's actually this last demand zone right here in the form of that wick. It might have actually been traded through. Let's go to a lower time frame even and check out what else we have. So if we keep on going, what you'll find is we actually have another demand zone. No, actually this was mitigated too. This demand zone was mitigated. So yeah, a lot of this mitigation took place and took place really well. So there wouldn't be anything I'd be watching that's that stands out too much to me. So there's still really nothing. Just playing through all the timeframes. This is how I literally play through timeframes and decide which zones are best for me to use. You can see that zone is really nice if you did use that. I overall just use this overall zone. And you can see that if we go back to price right now and just play it out really quick, actually, so yeah, price does come and tap into that demand zone very nicely. So you could have found even entries off of there. You can see that that was one of the reasons that I found these two entries at the start, right? And those ended up both losing, came to grab some deeper demand zone in here, which we still understand is part of this larger demand zone's mitigation right here. Or as we said on the 8 hour, that 8 hour mitigation right here, because this whole thing is its own zone. And if you remember my 50% video, if we took a 50% of this, then you clearly understand what price was aiming for there, just fulfilling the last bit of sells before buys in that overall heavily volume packed down move before the up move, right? Demand zone has a lot of orders in it. If you're on a higher time frame, like an 8 hour, a daily, a weekly, a 4 hour, you're going to have a lot more orders there. So when you look at the 50% of it, you're going to ultimately see the last possible zone for deep mitigation on behalf of smart money. And that's exactly why this move right here happened. Again, I didn't have this 50% drawn in. Instead, I looked to confirm the moves inside of there. So as we move down, I'm not going to talk about the actual confirmation entries here. We have multiple entry criteria that I teach in the mentorship and that people have now used to get funded over and over again. And again, this is not financial advice, so do not sue me. Thank you very much. But ultimately, in the mentorship, if you do want to join, you will have access, exclusive access instantly to all of the entry criteria and to the community. And it's been absolutely fantastic in the community. Thank you all for your insane support. Even if you haven't joined, thank you for messaging me with all the plays you made. And I know a lot of you caught this right here as well. But ultimately, what we're going to talk about is how basically today price came down and began to undergo this accumulation. Of course, you can go ahead and label this accumulation if you'd like to. It's not necessary, but ultimately you have your selling climax, your AR, your ST, your sign of strength in phase B, your ST and B into your spring, into your major displacement in price. And again, if you have not seen my video on displacement, make sure you watch it. That major displacement, which breaks multiple structures, putting in motion this break, and we are looking for the entries off of the test, thereby being the, again, last down move before the up move, the demand zone that they had to sell into before buying, so they'd have to come back to get rid of the last positions to go long. So as you can see, this is a quick example of how there are going to be losses as well with the trades you take. This is actually a great example of what we spoke about in the backtesting video. If you have not seen it yet, make sure you check it out. But ultimately, we have a zone and we have a criteria. Our criteria is either this demand zone wants to hold the move of this price upwards, and if it does, then we are going to look to target the tops. That's why, despite the fact that I took partials on this trade and this trade broke even, all of them were ultimately looking to target the very high here, understanding that a bullish bias has been put in motion, and that bullish structural play off of the institutional sense with the protected lows are going to continue unfolding to the top side, right? So when I got into buys here, I looked to manage to this low, got into new buys here. I believe I partialed at this high here and then got stopped out of break even there, allowed this to keep running. I never partialed this move right here, and that came to hit break even instantly. So this is like a break even and a partial trade right there. I took one loss on UJ. We're not going to go over that right now. That's going to be for this weekend's webinar in the mentorship, so I'm going to wait to do that. But ultimately, price came right down, accumulated in that area just like we expected it to accumulate, especially if you used the 50% rule. As I teach you guys, if you use the 50%, you had a beautiful area to start looking. You have an alert here. You take a look at it. It displaces at the top side. If you have not seen the video on displacement, make sure you check it out. And after that displacement to the top side, we look to get involved in the last down move before the up move. And ultimately, your buy entry is right there, looking to take it to the top side right here. And of course, you're not just looking to take that fully. You're looking to manage it at these highs, probably breaking even here, or wait for one more structural play and break even once this low is created. Therefore, you know that order flow has again shifted and now is going to, on a lower time frame, create new institutional structure that's going to want to hold until it delivers to our place of liquidity, in this case being this high right here. So ultimately, this is again a beautiful example of the 50% rule. Of course, we understand that a sell before the buy occurred here, and again, you could be looking to enter on the open. And again, this is perspective based, but you could be looking to analyze and enter on the open of this, or like we said, in that sell, there's going to be refined areas and refined orders that created this sell move. So you could be looking at the 50%, which would have gauged you another extra like 13% on that trade. Based on your risk, if you risk 0.5%, then that's another about 13%. But overall, it was an entry off of the open. A lot of people in the mentorship caught this up themselves, of course, because we do not endorse signals or anything of that sort. So it was a fantastic day for everyone in here. It was a fantastic trade. Congratulations to anyone that caught it. This was a quick video to basically show you that there are going to be losses in your journey. There are going to be losses that happen like this, and then price continues to just keep going lower, and you're not going to be able to get more entries. And there's also going to be times where you get entries, you get partials on them, they keep going, or you get entries, you get partials, and they take you out and then go long. Or there's going to be times where you get entries, you get partials, you get broken even, and then you get new entries that do end up running as per your overall analysis, right? And as you can see, you'd be break even at this point after we created this low. You could already be trailing if you'd wish, but remember, lower time frame structure can still shift and reaccumulate. So usually I like to break even and allow it to run. and just partial on the way. And because we understand that we work with multiple ranges, what we also do is recognize that when this begins to take off, it creates a new range basically to this high and from this low. So at this point, you could have the opportunity, or you could begin to look to partial at highs like this, right, as your range number one. So you could define 8 areas as ranges, and this could be your range too. So this is going to create areas for you to partial on the way. In the case that smart money wants to take its price above there, use the buy stops above these highs to start going short. And when that happens, you don't have to just take a break even on that. Instead, you can already have partials on that. And this is what you'll also see represented and illustrated in the backtesting video. So if you have not seen the backtesting video yet, make sure you check it out. It's very in-depth. It'll help a lot of you with your own psychology, with your emotions. If you want to get deeper and you want more videos, more live, more in-depth, more one-on-ones, a community aspect, check out the link below. Other than that, thank you so much for watching, guys. I hope this helped you out. Great little run we had there. And I will see you guys in the next video. Appreciate it.